Everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to do our daily technical analysis, updated commodities, work our way through the dollar yields, precious metals, and commodities ETFs that I follow. I'll interject my financial opinions as we go through it together. And if you need help with anything, check out finding-value.com. That's where I dive deeper into all of these topics, looking for potential investment opportunities and sharing those opportunities with everyone in the community. I am a longer term investor, so I don't do short term trading that much, but I look at longer term setups for this commodity bull market to play the whole commodity bull market with. We do have a discount code. Discount is that coupon code. If you want to see what that is, it's in the description link below. So let's dive in here. Let's take a look, see what's going on today. We've got the dollar here. The dollar is sideways today, just a slightly down candlestick or sideways candlestick. The momentum is still up, and that is being driven by interest rates. Interest rates are cruising higher. Actually, they're not really cruising higher. They are accelerating higher, is what I'll call it. So that is putting pressure on the dollar to remain strong in relationship to other currencies whose interest rates are not going up like ours is. So the 2-year yield, we're up 1.19%. Pretty big move today. This is, again, pretty strong move the past week for interest rates on the 2-year bond. The 10-year bond up 1.73%, and we are coming up to and eclipsing potentially this downtrend line. Could we see another move higher? And I would say yes. We are going to go higher in the short term. It's going to try to break out here. And that's what the momentum is doing. It's right into that resistance. The 30-year doing the same thing. We've got good momentum and we're at resistance. And this is a very bullish setup. Big candlesticks, pullback. Big candlesticks, smaller pullback. And then a little pullback. And this is going right into a bullish engulfing on the monthly. So to me, this looks pretty good to try to take a shot at breaking out. I don't know if it'll do it immediately, but it's got momentum and it's going to try. See what happens. TYX, TNX ratio, pulling back just a little bit. We're back about 0.23%. We're at a very low level, so the curve is staying inverted. That's what this inversion is down here. It has not come uninverted. So precious metals, in particularly gold, that's when gold really, really rips, is when we get the uninversion of the yield curve. And this is the 30 and the 10. TLT bond prices obviously continuing lower, that we've got an increase of interest rates. So here we are heading lower. This past week's been pretty brutal in terms of bond prices. And on the long end of the curve, I don't know why anybody would be there. So could we break down and go further to the downside here? We very well could. And what we have here is a breakout, a retest, and then the rollover. So we could see higher interest rates here and lower bond prices. The 2 and 10, the curve is uninverting. It's coming back, but it's doing that with the long end of the curve going up faster than the short end. And that's a weird dynamic. We haven't seen this type of trading. I don't know if we've ever seen it. Again, I didn't study the 70s when the yield curve uninverted. I'd have to go back and look back in the 70s, but all of these other yield curve uninversions here, where we've come down, I could put the 10-year underneath it. For the most part, it's when they were declining in interest rates. Every single one of these has a decline. There's another one you can see that was a sharp decline there. This one also was a decline in interest rate. So decline, 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 decline. Every single one had a declining interest rate on the 10-year as this yield curve uninverted. We could also put the 2-year underneath that, and you can see that this fell faster than the 10-year. The 10-year fell a little bit, but these were like falling off a cliff. But when we look on the right-hand side here, we've got the 10-year going up faster than the 2-year. So this yield curve on inversion that we're seeing here, and people are comparing like, if we fall, right now it's falling with the yields going up. And that is not the same situation as every single time in history that we've seen here during these pullback crashes. So we'll have to wait and see. We'll have to see what occurs here. If we continue to pull back and we see interest rates drop like a rock, that means people are running into bonds, but they're running away from bonds at this time. Gold's down $46 an ounce. Pretty surprising, I'll be honest. We've got these big selling pressure candlesticks all through here. And that does mean something to me. It means that there's still a lot of selling pressure. And usually when I see this type of selling pressure, it's towards tops, not bottoms, or beginning of consolidations. So we've got some big red candlesticks here, a couple, but these are pretty big. So we'll see what occurs here. It's still above this trend line, and we're getting some stronger selling pressure here, is what we're encountering. Silver down 2%. This still looks okay, though. We've got big trend lines going across here. The big, huge supports there at 25-ish dollars. I don't think we'll go all the way back, but it's possible that we could pull back to that area in the short term. It does look like a potential flag pattern where we could head lower here, especially that we've got this strong selling pressure here. So maybe we head a little bit lower. That flag pattern would be something on the lines of, like this projected downward, 26-ish dollars. That's exactly where I was circling. So somewhere in that area is possible. It doesn't mean that we will 100% get there. And then platinum's down 1.8. We're at the lower end, right at support going across here. So we'll probably find some support here soon. And then palladium down 3.3%. And that does look, maybe we could tag it down here at 916, 917 or something like that if we get down there. GDX also pulling back, and this looks a little bit bearish to me. We entered this, came on up, and then we were breaking to the downside here. So I do think we could pull back further. GDXJ doing the same thing. It's a flag pattern that I drew in yesterday saying, well, we could break to the downside here. It looks like an inverted flag pattern. It looks like that is occurring. But we also have strong support that's right underneath us. So are we going to blow through it? Are we going to get stuck in a lot of this support that we've got going across there? Difficult to say, but at this time, momentum is down. And then SILJ also getting a little bit of a selling pressure day, 2.75% down. Very similar to the other setups. XE to gold ratio also falling a little bit, down 1.2%, and we are at incredibly low valuations here for gold and silver mining companies. Now, crude oil ripping up higher today, 1.64%. I've got a downtrend line break here. We had a bloody nose yesterday in a retest. And what I said is looks like it wants to go higher. So we got our upward move up about 1.6 something percent. Now, what do we set our eyes on next? What is important? Well, first we want to break through this. There's some resistance through there. We got to get through that first. Resistance is at 71.50. We want to get above 71.50. Close up above that. Up here at 72, whatever it is. We look across, there's a lot of resistance through here. So we're gonna get some resistance as we try to come back up all through this area here, coming across. So there's some resistance, but we've broken out of the downtrend. We've got momentum going up. We're gonna see how far we can push this thing. Our next eyes are getting up over 72-ish, 72.50. And then breaking the downtrend at $75, $76 up here, depending on where we hit it. ETF gas down 4%, getting some selling pressure there, and the momentum is picking up. The reversal candlestick was here, and that is what ensued after. And that momentum to the downside. We've got natural gas in America also selling off some, and we are getting some bigger red candlesticks. And that is a bearish engulfing candlestick where we could head lower in the short term. The support line, which is this line going across, is right at $2.78. So that is something that we could hit. Now, again, this is all short-term technical analysis, and I like the longer term stuff, but short term, it's heading lower. XOP, yeah, you know me. So we had crude oil up 1.66 and natural gas down 5%. We've broken out of this downtrend to the upside, and this is your return move. What do I do on return moves? I buy them. I buy them. And what we want to see is we want to see some strength in oil. We're at resistance here. This resistance that we're trying to break through. On a monthly candlestick, if we look, it is bullish. We've got a big bullish breakout and a smaller pullback. Is it going to materialize to a breakout? I don't know. We'll have to see. This is the weekly that we're looking at. Breakout, turn move, retest. We should hopefully get a move higher. And if oil continues higher, that would be a starter. And then we need to look at these XOP and other ETFs. Here's XLE for an example too. This one's broken back below some of the support levels, but we have support where we're at. And I'm looking for a potential, basically a candlestick that is putting in a bottom, like a bullish piercing, bullish engulfing, a big hammer candlestick with a big wick on the bottom, something like that. We don't have it yet. Momentum's to the downside on XLE at least, but we did get up here and we are trying to break out. I also think that if they're going to try to manipulate things, the Federal Reserve, they're going to have to do it here. So we'll see what happens. OIH also selling off a little bit, and there is some downside momentum for OIH. Newcastle coal futures down about 1.7%. We've been pulling on back, and the momentum's to the downside. On a longer term basis, your base is here, your breakouts here, this is your return move. So it still looks good to accumulate on a long-term time frame. We've got Sprott Physical Uranium Trust still inside of its big flag pattern. We are getting some selling pressure here today, and we are still inside of the flag. We've got uranium futures pricing trading sideways, side of a big falling wedge. We've got URA selling off some more today, and that is gaining some momentum to the downside. So more downside is expected through here, and we've got good support down at $27. We still have a little bit of support where we're at, but the momentum here is probably going to carry us down to maybe 27-ish. URNM also selling off some, and we are losing support there. URNJ also selling off, losing support where we're at. So we could come back to this lower area down here. In fact, I would welcome that. If we get down there and we get to a cheap price down, if we get down here, I will probably buy more if I'm smart enough. Copper down 1.2%, still inside of this big, we'll call it consolidation pattern. And it could break higher or lower here on the third. So this is the 1, 2, 3. On the third one, sometimes they break directly outward. Sometimes they pull all the way back. And sometimes you even get a false breakout. So there's no real, you can't with 100% say, this is what's going to occur. These tails, as you come to the conclusion of these big consolidations, can get a little bit wild. And sometimes you get a washout sale that does that. People go short here, and then the big boys reverse it on them and then squeeze all the shorts to make a bunch of money on the upside. So don't get caught in that either. The OPX also selling off. Does look like a flag pattern, inverted flag pattern, perhaps, where we could come back to a lower level than where we are today for COPX. Iron ore down just slightly. This still looks bullish with a big flag pattern there. Iron ore looks good. Aluminum's up, but it's still underneath resistance. We've been under this for a long time. Almost like someone's holding it underneath that resistance. They're just holding it down. Nickel, sideways. No update there. We've got Mu down slightly, but still above support. Still looks okay. We've fallen back at a pace slower than what we went up. So it's still bullish, and we might go a little bit lower and tap support again to complete this like that. Complete that pattern. Emerging markets, sideways. Again, we've got strong dollar, strong yields, and things that are sensitive to the dollar and yields are gonna come under pressure here. Carry, coming under pressure, but this is falling really, really slowly. This looks like a bullish setup to move higher. Tan just holding its own, which is pretty bullish for stronger dollar, stronger yields. Lithium selling off some. It's still holding on, moving sideways. REMX selling off a little bit. Doesn't like that stronger dollar, stronger yields. Baltic Dry Index continuing to sell off. This looks pretty weak. Momentum's definitely to the downside. We got to see that gather itself. It still has explosive diarrhea here, getting it everywhere because it just keeps going lower. XHB down a little bit, stronger yields and stronger dollar. We're still in an okay area, but the momentum is to the downside. Russell down a little bit. It's holding on though. It's above a bunch of support, so I wouldn't be too worried yet. S&P 500, this thing is up in nosebleed territory. It's holding on, moving sideways. Incredible, given the strength in yields in the dollar, which is it's twofold there. People like dollar denominated assets when you have a strong dollar because you get appreciation of the asset in a currency that's appreciating. But the negative is most of the time when you have interest rates going up, you discount to a different interest rate then. So that has a downward pressure on it. But all that matters now is money flows, seems like. And the NASDAQ is up above this rising wedge, and it's holding on at this time. SMCI down 3.9%. This is going to take some time to work its way through the cycle. We've got NVIDIA down 2.25%. It's a bearish engulfing. This looks bearish, guys. Does not look good. And we've come up into a rising wedge, squeezed up, broke out, retest, and looks like it wants to head lower. Bitcoin up 1.5%, still looks good, sitting on top of a lot of support to go higher. So that still looks good. Ethereum is still sitting on top, a little bit of short-term bearishness, larger selling pressure move with a rollover that could roll over and get down here again in the short term. MicroStrategy up 4.2%, but it hasn't really been able to jump out of this range, is what I'll call it. But it very well could. We'll see what Bitcoin does, because Bitcoin does look good. And then the VIX is down a little bit, and that's just trending sideways, being held down above support of the long-term support level. But we've broken to the upside, and it's been held down ever since. That's what I've got for today, guys. Give me a thumb up for the content, subscribe to the channel, subscribe to the website, discounts your coupon code. We have a Sunday question and answer session coming up at 5 p.m. Mountain Time. That's when you can ask me whatever you'd like. You have to be a member in order to attend that question and answer session. It is on the website if you want to find it. And that's all I've got for today. So we'll catch you next time. This is Finding Value.